Peter Rose, Longwood Currency Trading. You can build up a small account, but there's a catch. What I want to do in this video is to try to make you aware of what that catch is so that you can determine if you want to learn how to build up a small account. In the past, the only way that you're going to make a lot of money in the currency market trading is to have a lot of money so that you have a large account and that you're using the power of the force of the money and not the force of the market to make your money. That's my statement, and I stand behind that, and I'll show you why in just a second here. To give you some background, if you are new to the channel, I've been studying the currency market since 2007 and actively trading since 2012 because I had approached my study as an academic. I've got a degree in physics. I had a 33-year career as a software engineer and 40 years in real estate investment. So trading wasn't really something that I was looking at doing to make money because I made my money in real estate. But after a while, and as a computer software engineer, I was writing simulation programming and stuff, and thought, well, yeah, I could probably do this, and started out with a mini account, 2 minis, and I lost that, and did some study and reloaded and lost that, and thought I needed more education, and when I finally did fund my large account, because of the poor quality of the education that's out there, I lost $40,000. Now, I'm not blaming that on the education. I should have been smart enough to understand the weaknesses in that education and what these people on the videos were trying to teach and all the other stuff, and do instead what I did after I'd lost all that money. I had $5,000 left. That's a small account. You can have a $500 account, but you shouldn't be trading currencies with a $500 account. You need to have at least enough money so that when you lose it, it hurts so bad that you won't make that mistake again. And if you don't do that, all you're going to do is lose. I'm sorry, but 90% of the traders lose 90% of their money in 90 days. That's the statistic. Over 43 million client transactions. You can try to fight that, or you can listen to people like me trying to tell you the straight scoop. This is about, you can build a small account. The question is, how far can you build it and at what cost? In any event, I took that $5,000 account and I analyzed, I stepped away from all the education that was out there, and I analyzed it the way somebody who's in physics and math and has written computer programs, complex internet-based business applications programming. I stepped back from the currency trading market and looked at it as a problem to solve, because I'm used to solving complex problems. And what I saw was that there's no complexity. The market is complex, but trading it is not complex. That's the difference. That's where people get messed up. And I took that $5,000 and I doubled it, just short, about $200 short of it, in about 4.5 months, and then I put another $10,000 in my account, and I've been trading and messing around with it since, and currently trading a 6-figure account. So, solid 6-figure account. Just so you know where I'm coming from and where the advice is coming from. Can you build a small account up? Yes, you can. You could take $1,000 and you can build that up to $1,400, $1,800. If you made $800 on a $1,000 account, that's 80% return. You might be able to do that in 4 months, like I did on a small account. As I've said many times, I was able to take that $5,000 account and double it in 4.5 months. Would I be able to take a $100,000 account and double that in 4.5 months or a year? I don't think so. And there's a reason for that. When you're taking a small amount of money, you have a different perception of the dollar value than you do if you're trading a $100,000 account. I have a 10 full lot trade on right now, $100,000. Each pip is $100. If you're trading 5 minis, each pip is worth $5. You see where the psychological problem could come into play. If I'm trading a $5,000 account and I lose 6 times in a row, I've lost $30. If I lose, I lose 10 pips, I lose $50 at $5 a piece. If I do that 6 times in a row, I lose $350. That's a 35% against, or I'm sorry, not a 35%, but it's 3/5 of that 3% or something of that $5,000 account level. But it's only $350. I mean, you could buy a 4K 60-inch TV for $350. I mean, it's not a lot of money. Now take that same 10 pip loss on a $100,000 account. That's $1,000. You do that 6 times in a row, that's $6,000. I can easily replace $350 in that 5 mini lot account. But where am I going to come up with that $6,000? You could say, well, it's all percentage relative, but it's $6,000. Some people don't make $6,000 in 3 months. You could say, well, if you got $100,000, you should be able to come up with another 6. That's not the point. The point is, do you want to trade with risk, more risk than you need to trade, and take the chance of losing that $6,000? You're not encumbered by that problem when you're trading 5 friggin' mini lots. You know, if you're trading a $1,000 account at $1 a pip with a $600 margin that you're going to have to come up with, in the U.S. you got to pay 5% of, or you got to put down 5% of the cash value of the position you're taking. So you're trading a full lot, at $100,000 of currency, you're at $5,000. But if the value of the currency was 2.125, your margin is much higher, right? So you need to take that margin into consideration as to how much money you actually have to trade with. So in a $1,000 account, let's say you have a $600 margin, that 5% of whatever that number is, the cash value gives you $600. Well, that gives you $400 to trade with. That means you've got 400 pips that you could lose before you have to reload that $1,000 account. That's $400. If you lost $400, is that going to change your life? That's going all the way to the wood. That's crashing the account. What if I was trading at $100 a pip and I lost 400 pips? You see the difference? So when I'm trading a mini lot or 5 minis, or geez, I see some people doing this stuff at the 1 full lot level. Crazy, but it's still. I mean, look, in the westernized countries, the U.S. and Canada, the U.K., so many other countries. I'm just naming some of the big ones, but even if you're trading in India or New Zealand or Ireland or Pakistan or wherever it is that you're trading, you can come up with the equivalent of $10,000. You know, so you take a $4,000 hit, the same 400 pips, $4,000 hit against that $10,000 account. If you lose 40%, you could come back from that. You know, it's problematic at the higher levels. And the higher levels are, you start trading a $30,000 account, 3 fulls, and you're going to feel that. That's going to sting a lot. I mean, you're trading for 150, 200 bucks a day, and that's more than the cost of a pizza that you're going to lose if you get it wrong many times in a row. So why could you build a small account up but not a large account? Well, that's number one reason, is it's from a psychological standpoint. And I know you're not going to believe that. No, it won't happen to you, and it's just numbers on a piece of paper. Hey, Slick, go to your little mini account and lose 60 bucks or 100 bucks, and then tell me what it feels like to be $10,000 underwater in a position, which I've been on the large account sizes that I've traded. And tell me that that isn't going to make your roids flare. It's going to freeze you up. It doesn't freeze me up because I'm used to trading really big numbers in real estate, hundreds of thousands of dollars. I've lost $1 million net worth twice in my life. And that was all the net worth I had, by the way. That's $1 million. Lost $1 million net worth twice. But I got it back each time. I was able to bring it back each time. But it took me 10 years each time. So losing $10,000 or $20,000 with the size of the bank that I have and my comfortability with risk and loss is not the same thing as what you're going to be faced with unless you've done and walked in my shoes. And I never ask a student to walk in my shoes. I simply tell them, if you walk in my shoes the way I learned how to do currency trading, you're going to lose. If you learn how to trade the way all these people are trying to teach you how to trade, you're going to lose. Why can I say that? Because I understand probability and statistics, and I understand and believe and know and have first-hand knowledge of a lot of people, including myself, who've lost 90% of their money in 90 days. So I know how to avoid that. And the fact that I would say I'm sitting with a $10,000 lost open position, I can put that into perspective, because if I was to lose that $10,000, I can make that back in, it would take me a month, or 2 months, or 3 months, or whatever it would take. But I could make it back because of the size I'm trading, and I've got a really good win-to-loss ratio. Not really good. It fluctuates because I'm constantly experimenting. I'm doing things to push the envelope, and so the win-to-loss ratio is not as an important of a ratio metric for me as it is for someone with 3 to 5 years of experience. You need to have a good win-to-loss ratio and understand what the ramifications of using that ratio are in planning your trading. If I follow a set pattern of rules and stuff, I've got a solid win-to-loss ratio consistently, and it's better than 60-40. And I've done the mathematics and I've done the research to show that if you need a 60-40 ratio if you're going to trade a large account. You don't need shit if you're going to trade a small account, because you trade a small account differently than you trade a big account. And so if you're trying to make, quote, a lot of money, 40, 50, 60, 80% returns, doubling your returns on a $500 account or a $1,000 account, you could, and particularly if you're dealing with high leverage, You could blindly stumble your way into taking a $1,000 account and running it to 10,000. There's absolutely no doubt about that. Statistically, that's very likely. But the real statistics are you've got more than a 90% chance against you. There are a few people who slip under the radar and will take $1,000 and run it to 10,000. And they're the ones that are jumping up and down. They're going to tell you how to trade. And those are the people you're listening to because that's what you want to hear. But that's like listening to some guy who just ran through a minefield, just drunk, and he just runs through the minefield and he gets to the other side. And he says, follow me, I know how to get through the minefield. He doesn't know how to get through the minefield. He just was lucky he got through the minefield. And he had to step over the bodies of the other 90 people that weren't quite so lucky. So who would you rather believe? One of the bodies that's crippled up there as to what the dangers are of that minefield, or are you going to listen to the asshole that just ran through it and got lucky? Don't listen to the luck factors that are out there. Yes, you could take your small account and you could make, quote, a lot of money, a 60, 80% return on that money. But the risks that you have to take in order to do that are massive. Unless you have 20 years of experience or 30 years of experience. And you see some guys that are out there that are consistently taking small account sizes, $300, $500, and running them to several $1,000s in 6, 8, 10 months. But they're taking 500 trades to do that. They're scalping. And the rules of scalping are totally different than even if you're day trading. And if you're not scalping, I don't know how you're going to run that $350, $500 to $2,000 or $3,000. But listen, let me ask you something. If you took that $350 and you flush it down the toilet 6 times, you'd be $1,800 down, right? And then one time you take a $500 account and you run that to $3,000. So you've lost 2 to make 5. You're 3 up. All the angst and all the crap, and you're running through the minefields, and you got $3,000 now that came off of your 500. Does that change your standard of living? Does that change your life? $3,000? Well, if you're so poor that the only thing that you could start with was $350 or $500, you had to reload that 6 or 8 times. Where'd that money come from? Guys, can you put this into perspective? Why are you trying to take a small account and make it big? The odds are against you. It's a lot of fun. You can pound your chest and say that, and somebody says, great, Slick. Go down to your local bank, pull $30,000 out, and let's see you do an 80% return on that. You're going to lose that. Because the skills that you learn in order to take those little tiny amounts of money and build them up into the larger sums are not going to work for you with the larger sum of money. I mean a big sum of money. You know, a larger sum, you take 1,000 to 5,000, or you take 5 to 10. They're not going to work when you take 30 and think you're going to go to 60. Unless you have 10, 15 years experience. But if you've got 10 to 15 years experience, you're not watching this channel. You're not watching videos. You're trading. So, can you take a small account and build it? Yes, you can. You really have to know what you're doing, though. And you can't delude yourself into thinking that, oh, I've taken this $5,000 account to $10,000, and I took the $10,000, and now I'm at $15,000, and now I'm going to, what are you going to do? At some point, you're going to hit those 6 statistical losses in a row. And now you've spent all that time building up this little amount of money to get to this $15,000 level. That's all the money that you have, because that's all the money that you cobbled together in the beginning. You've got to $15,000 with maybe a $500 starting stake, or maybe you've had to pay a couple of $1,000s in order to kind of get things right to get to the $15,000 level, and you're over leveraged. Instead of trading 1.5 lots, you're trading 3 or 4 because you happen to have pretty good margin requirements where you are. 5 lots. So you're trading 5 lots on a $15,000 account. You're trading $50 a pip. How long do you think that's going to last you when you hit your 6 losses in a row? I mean, I'm just trying to bring some reality to you. Don't learn how to take a small account to a big account. Learn how to trade the small account to make a good win-loss ratio against that money. And then go out and find some money, work hard for that money until you get enough money that you can trade that account that will pay you a significant amount of money back. And I think that level is around 30,000. I think if you know how to trade and you're making 20-40% on your money, you could say, oh, 20-40%? Yeah. Look, in real estate, we're making annualized returns of 15 to 20% based on true core ROI, property appreciation, and cash on cash net from rental. And add in some depreciation. You get 30% returns. And you have to know 1031 exchanges and blah, 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 if you really want to parlay that stuff up. But that's why so many people fail in real estate too, because they don't understand what the rules are. They just see some shithead buying properties for no money down. I had a friend of mine, he didn't have a clue. He had a business, a really successful business, sold it. He had, I don't know, $1.5 million or something like that. He was running around buying up real estate like it was going out of style. He was buying it, a lot of it, some of it no money down. And then the crash came, and he had mortgages on it because he was leveraging his money. You know, instead of he had a couple of $100,000 instead of paying cash for the building. This is 30 years ago, 40 years ago. Instead of paying $200,000 cash for the building, he'd put $25,000 down, and he'd take the $200,000 and he'd buy eight pieces of property and carry the balance on the rest of it. And so when the recession came and the mortgage and the property values came below the mortgage amount, the banks called him and said, you need to make up the difference. You got to come up with $100,000. He didn't have it because it was all splattered out. He had no clue. He's over leveraged. He lost everything. He lost his boat. He lost his car. His family left him. It was gone. So, yeah, you can pyramid this shit sky high, but at some point somebody pulls the key brick out at the bottom, and the whole thing will go down on you. Is that how you want to live your life? You think you're gonna get off the train before it crashes? How do you know when it's gonna crash? You don't. And so that's why it's important for you to build good skills with a small amount of money, so that when you add money to the account, you can make a good amount of return on your money. You know, if you put your money in T-bills right now, 10-year will get you 1.5. CD is 0.03% a year. You got to put it something that's going to appreciate. What are you going to do? Put it in gold or whatever. So if you could get 8 or 10% return on your money, you'd be doing okay. You'd be doing great. 10% return on $1,000 is $100. So in a year, if you made $100 on your $1,000 trading, you'd be fine. Well, $100 is on a $1,000 account that's 100 pips. There's 200 trading days in the year. I mean, how tough is that? If you made 2 pips a week You'd make 8 pips a month. There's the thing, and there's about 100 pips a year, 2 pips a week. I mean, you have no clue as to the power that sits in your hands if you understand how to trade. And trading is not taking a $500 account and running it to $1,500. Trading is not taking a $500 account and making 10 bucks a day or 20 bucks a day based on signals that you're getting from the aliens or some signal service or whatever. This is not trading. You need to find somebody that knows what they're doing and does it realistically and will teach you realistically so that you can benefit from the power that you have at your disposal if you do this right and quit worrying about taking a small account and running it to a big account. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.